One of the most important things if you want to become a successful analyst is for you to know how to run a good and proper top-down analysis. In everything you want to do in life, the foundation is very, very important. And when the foundation is gotten wrong, no matter what you build, at the end of the day, it still wouldn't make sense. All right, so foundation is very, very important. Top-down analysis is something that both day trader, scalper and swing traders, do before approaching any trading day, any trading week, or any trading month. So in this video, I'm going to be showing you how to run a proper top-down analysis regardless of whatever trader you are. If a day trader, scalper, or a swing trader, it doesn't matter. It just depends on which time frame you want to look at. I believe this is just a personal thing, after understanding your strategy. But one thing that never changes is the top-down analysis, because you need to get into the market at some special levels. It now depends on what you want to make of those levels in the market. So if you want to use the level for scalping, you just want to take a very small amount of money in the market, you want to have a very tight stop loss, or you want to use it as a day trader, all right, and you want to have entries and you want to target like 1 to 3 right here, okay, something like this. Or you want to do it as a swing and you want to target all the way down like this, and you want to look. All right, now the difference between all these is just time frame and how often you're going to be getting into trades. This is a trendy market, all right, and when you're in a trendy market, that is when you make most money. Of course, some people make money from rangy markets, but everybody are waiting at a certain key level, all right, to get into the market. All right, if you're trading, you can't just say, oh, I just want to get into the trade, any random places that I see. All right, everybody always wants an area of demand, area of supply and demand. Higher time frames are more respected, all right, than lower time frame. Let's say if you're trading on the 30-minute and 15-minute time frame, all right, the same break and retest, or higher highs, Fibonacci level that you're going to be getting, the accuracy of daily is definitely going to be different from 15 minutes and 5 minutes or 1 minute. All right, so it's always good for you to understand what the market is doing at a higher time frame to the time frame you're actually trading, just to be able to have a bigger picture of what the market is doing. For the purpose of this video, I'm just going to be using the daily and the 4 hour. Okay, now in order for us to understand what the direction of the market is, if you're a pro trader looking at this, all right, you can easily understand on the daily time frame that the market is on a downtrend. You can say this market is on a downtrend, and what you can try to do is take advantage of when price has moved down, all right, and has moved to an oversold level, and price wants to have a retracement. You can take advantage of that, all right. But for the better of it, if you're just starting out, it's better for you to always trade with the trend. All right, if you're trading against the trend, it's not really guaranteed, but if you're trading with the trend, it's always very good. Okay, so the best thing you want to do in this situation is just to look for sales. So looking at this, what I can see is a downtrend. How do I know that this market is on a downtrend? What I saw was price moved all the way here, push back down right here, okay, move up a little bit, break this, the previous low, which is this one, then push back up again, all right, didn't break above this one, then make another low again, breaking below this guy, push back up, not breaking above this one, then push back to the downside. What does this mean? We have 1, 2, 3, 4, 5, 6, 7, 8. What this means is price is on a downtrend. Okay, price has been moving steadily to the downside. Okay, now that's on daily time frame. Okay, now how do we approach this market? You can decide to go to 1 hour, all right, and say, okay, if price have a retracement, if we have the next retracement push up, you're going to take advantage at the top right here and push the market down. The purpose of going to the higher time frame and using the higher time frame to wait for what the market wants to do is just for us to be able to know the direction, and the purpose of using a lower time frame is for us to have entries, to have a good entry, to enter from a very good place, All right, I'm not just getting into the trade on a random places. From this high right here all the way to this very low right here, price moved to fib 0.5 and 0.6 zone. All right, before moving to the downside. Okay, the same thing. All right, price move all the way from here all the way to this point here. Price got to 0.5 zone, push above it a little bit, and price crashed to the downside. From here also we have price push all the way to this point here. Price made it back to 0.5, then got to 0.7 at the top right here, comes down. This automatically tells me that what I'm expecting right here is going to be the same. All right, I'm going to expect that price is going to come to fib 0.5 or 0.7 wherever price gets to from here all the way to this point right here and crashes. That's what I'm expecting in this market, which means that we need to go to the lower time frame to look for entry if price gets to these levels. All right, let me mark the level on the chart so we can see it very well. If price gets to these levels, all right, because price has been doing that for a very long time. So I'm expecting that if price gets to this level, I want to see some certain reaction for me to get into the trade. Now, the reason why we need to go to lower time frame is just for us to be able to have the price at a very good point. Now, at this point right here, if you're waiting for price to make a higher high or change structure, then start pushing back to the downside, we could have our entry somewhere around here or after the break of this one. And you can see what we make right here was very little. All right, because it's always advised for you to target the last low. Once price gets to this point, I want to get into the trade, and I know that daily time frame might probably not give me entry very quickly. So I'm going to scale back to 4-hour time frame, all right, to look for entries. Okay, now I'm going to take this one out, and I'm going to mark this point here as my high. What that means is that if price break above this high like this, that will literally mean that price is planning on changing structure. So I'm going to go to 4-hour. What I want to look for on the 4-hour is I want to see something like this. Okay, something like this on the 4-hour and a break of structure. I told you before, if price break the structure, all right, it could mean something different. It could mean that price wants to change the structure and continue to go to the downside. Then I'm just going to continue to sell this one. So now what I want to see is for the last low to be taken out. If the last low is taken out, I want to get into the trade. All right, if we have something like this, I'm going to get into the trade right there, push my stop loss above it. So I'm just going to play this one. All right, you can see the low wasn't taken out. Okay, the low was not taken out right here as well. Price kept pushing up. Okay, right here as well. Price made another high. Okay, price continued to push up. Okay, price moved even deeper up. Okay, and right here what we saw was that price pushed to the downside, failed to break above this guy right here. I'm going to give you an illustration. Let's say we have buyers pushing the market to the upper side and got to this point here and don't have enough energy to push the market up. What that means to us is that buyers has been dominating this market for a very long time. They push all the way to this very top right here. Instead of them to continue the journey, all right, the sellers overwhelmed them, all right, that they couldn't make up with this high. They couldn't push price continuously to the higher point. There are two types of traders in this situation. We have the aggressive and the normal traders. The normal traders are probably going to wait and say, okay, if I have a retracement at this point right here and price give me some type of candle, I'm going to get into the trade from here to the downside. All right, and some other type of traders are just going to say, no, I'm not going to be waiting for price to come retrace. Immediately price just break below the low, I'm going to be getting into the trade, since they already know that price has gotten to a key level, all right, where the market needs to reverse from. All right, all they just need is just a sign that the sellers are stepping into the market. Aggressive traders are going to be in right here, their stop loss above here. They can also put their stop loss above here just to be extra safe. But for me, I always like to push my stop loss a little bit above just to be safe in case the institution just decide to take all the liquidity or the money above this point right here. In order for me to protect myself, I'll just push my stop loss a little bit high. Okay, then the target is going to be the next low. Let's play this, okay, just to see what the market eventually did. So as you can see, that was a full TP hit. If you're looking at the daily directly, you probably won't know which area you want the market. Let's say peradventure you're looking for the pattern that we looked for in this situation, which is a double top right here. If you're looking for the double top on daily time frame, you're probably not going to be getting that. Now we saw the double top right here, okay, but it doesn't print all the time. All right, so you're probably not going to be getting it right here. Now we had it here, and when we had our entry was too late. All right, if we go to 4 hour on this trade, we're probably going to be getting our entry somewhere above here. All right, it doesn't have to be this late. Okay, so that's what it does. That's the benefit of having a top-down analysis. And what I even gave you right here in this video is more like a trading strategy. If you follow something like this and just have a bigger time frame, then just connect it with a lower time frame and just look for exact what I look for right here, you'll be able to get into trades. Now what do you do if the market is ranging? You stay away. All right, you don't have to trade one pair all the time. All right, you can decide to have multiple pairs that you're going to be looking into. In my next video, I'm going to be teaching you guys how you can get sniper entries. So if you enjoyed this video, please do give it a thumbs up, and also if you haven't joined the family yet, please subscribe to this channel, as I'll be dishing out quality content for you guys. If it's helpful, please drop a comment saying helpful on the comment section below. God bless you, stay profitable, and I'm going to see you guys in my next video. Bye for now, guys.